Good morning, everyone. Sorry, I was distracted here this morning. I was reading and didn't realize that the markets had already opened up, but it looks like they've only been open for about a minute, so we're all right. Hold on a second here while I get you my screen sharing going on. Welcome to our Wednesday morning trading session, by the way. This is our open house session. My name is Eric Senft. I'm going to be your host here this morning. Let me give you a really quick overview of what you're looking at here. This is the Diversified trading system. And we say it's diversified because we're looking at the market from 3 different points of view. Here in the top left, we have the Hawk Scalper. Top right is the Falcon Swing Trader. Bottom left is the Eagle Trend Trader, and the bottom right is the latest addition to the DTS family. This is the Raptor. The Raptor is actually a combination of the other 3 trading birds all into one chart. So it incorporates elements of the Hawk, the Falcon, and the Eagle all into one chart. Regardless of the tool that you're using, all the signals develop the same way. Namely, we're going to get a warning dot along with an audio alert. And then when the signal is complete, we get a triangle and a hash mark. That tells us it's decision time, time to decide whether we're going to buy or sell the signal. You're going to see some of these signals, though, that we're not taking because they don't fall into our high probability category. What do I mean? Well, for instance, here on the Hawk Scalper, we tend to avoid signals that develop off of yellow bars. So here was a yellow bar signal that did work out, but here was a yellow bar signal that failed. So as a rule of thumb, we tend to avoid the yellow bar signals. You see, here was a yellow bar signal that didn't have very much follow through to the short side either. All right. I'll explain some of these things as we go along, and I'm going to point out, obviously, the tools and how we use them. Please feel free to ask questions. If there's another market you'd like to see, I'm focusing on the NASDAQ here this morning on my main monitor. I also have soybeans and crude oil up, but please don't be shy about asking questions. All right, well, right now we're getting a first micro-macro cross signal here in the Hawk. This is one of our high probability signals. Pardon me. A little bit of an issue with this first micro-macro cross, namely we may be at the bottom end of the trading range. I'm going to throw this one in just so that I can show you how these things work, but I do suspect we're going to see the NASDAQ move a little bit lower here today. So you can see we've got the warning dots. We don't have the signal just yet. I do anticipate the signal to print, and my entry will be right here at 47.92. I'm going to try to run this market out. In other words, I'm going to delete my profit objective if we get filled here so that I can explain this tool here on the right. Okay, so I'm going to delete my profit and my break-even target. This tool you see me using here on the right, this is a very important trading tool. This is called the Trade Manager. This tool essentially allows you to trade like the big firms on Wall Street. It allows you to maximize your earnings while minimizing your losses. Yeah, where have we heard that before? The trade 16 different stop strategies enabled here, and I haven't enabled it yet, but I guess I should so that you can see how these work. This is just the stock ATR strategy. They're all customizable. I can change the settings to however I want. These blue dots are the stop strategy. When I enable it, you're going to see the Trade Manager automatically roll my stops according to this stop strategy. That's only part 1. Part 2 is that the Trade Manager always allows me to control my risk. Currently, I've capped my risk at 2% of my capital. So that means no matter where I place my stop, I will never risk more than 2% of my capital. If it's more than 2%, trade manager won't let me take my trade. So whether I keep my stop tight or whether I keep my stop loose, my risk amount never changes. What does change, however, will be the quantity that I'm able to trade relative to where I've placed my stop loss order. But you'll see more of that this morning as well. So great follow through on that first micro macro cross signal. In fact, I may go to a parabolic or something a little bit more aggressive here to protect more of my profit. And how are we doing here? Well, 135 and change, that's not bad for a scalp. Come on, get down there. Get down there, you stinkers. So that was one of our high probability signals there on the hawk. While I was going through that, actually here in the wee hours of the morning, we had a green bar sell signal here on our eagle. So the market already setting up for a short well before the market opened, actually during the European session. So here on the eagle, you're going to notice we have this cloud. And no, it's not an Ichimoku cloud. We call it the cloud or the band. It does give us our directional bias. So when the cloud is stacked this way, we're buyers. When the cloud is stacked this way, we're sellers. Whenever the market encounters the hard edge of the trading band, that's this part right here, we expect a reaction. Here on the eagle, when we get a green bar coupled with a sell signal, that's actually a high probability sell signal for us. And you can see no problem had I been awake at that hour to hit our high probability target. So good signal early out of the eagle, so tipping off that perhaps the market was going to head lower. Quick look here at the Falcon, and we had our trend change signal right here on the Falcon. With the Falcon, we tend to pay a lot of attention to this trend line. When the trend line's green, we're looking to buy. When it's red, we're looking to sell. And this is our trend change signal. So the trend line changes color. We get this down push. The market actually opens right about here. The buyers try to rally it. The sellers come back. We produce a sell signal, and down they go. Oh, fantastic, Tony. Tony says, what a great way to start the day. I got in on that trade with 5 contracts. Way to go, Tony. Well, I tell you, the way the market's been trading of late, if you don't get in early, you don't get in because it tends to go sideways after that. All right, here's the Raptor now. I know a lot of you will be interested in the Raptor trading system. So as I said, it incorporates elements of the hawk, the falcon, and the eagle. Signal generation is the same, however. We get warning dots, and when the signal is complete, we get triangles and hash marks. Sometimes the way the bar develops, the warning dot ends up getting swallowed up. By the signal. That's not a concern. It's just what happens. And here too, we're going to focus on high probability signals. So for instance, here on the Raptor, this was what we call a double pullback signal. So the market moves twice into this trading cloud, comes out, produces a signal, and that was also around this morning's open. And then we had a subsequent with trend signal right there. All right, so there's your Reader's Digest version of the DTS system. And what we're looking for when we're trading. This tool here, this nifty looking tool, this is called the Geiger counter. This is actually what we call a system add-on. All that means is that it's a standalone system. It's not dependent on DTS. You can use this on any chart. All right, so if you're trading a 15-minute chart or a 500 tick chart or a 1,000 volume chart or whatever, you get the point. What this does, it's essentially a tape reader. So you get to see the time in sales, a visual of the time in sales here. And the needle, currently white, will turn green or red depending on the bias of the market. You get to see the actual order flow here, which is great on those days where the market is just grinding and you're wondering, did I lose my data feed? You can still see the orders flow. This dial that you see flip-flopping here around the Geiger counter, this is what I think one of the strongest features of this tool, because you get to see the actual buying and selling. You know, if you've ever looked at a dome and you see the buyers and the sellers in the market bouncing back and forth, well, sometimes it's hard to make sense of that, except when you see the wheel or the order flow just stick on one side. So that's what happens here. You see how the wheel is pulling over and sticking? If we see it hold, you know, for 3 or 4 or 5 seconds, oh, there it is. It was holding pretty good there. Oh, and they're coming back and holding some more. That shows us that there's a whole lot of buying pressure just entering the market. If the sellers can't come back and counterbalance that, then we can anticipate a little bit of a move higher here. If, however, the market does not move higher, that means the sellers have absorbed all that buying pressure and that the market will move lower. The Geiger counter was actually initially developed because one of our DTS owners said, hey, Adam, can you give me a tool to let me know when it's time to get out of a trade? So for instance, had he sold this double pullback signal up here, and now you're short down here, should you hold on or should you take profit? Right? So if you see that wheel pull over there and stick and stick and stick, well, then maybe you want to take profit, or at the very least bring your stops in a little bit tighter. All right. And the Geiger counter also very helpful for trying to determine whether the strength of the market is there to initiate an entry. The reason I don't have the Geiger counter on all the birds here is the information is redundant. So you can, but I'd prefer to keep my charts a little less cluttered. I forgot to mention these here. This is the Ultimate Support and Resistance Suite. 21 support and resistance lines forecast for today's trading. No, they are not floor pivots, and no, they are not Fibonacci retracements. They are much better. It's a proprietary algorithm that forecasts where the market is going to find support and resistance for today. It's based on a lot of things, price actually being one of them, which is uncommon for these types of things, but it does take a lot of activity into account here. The gold line is your median line. That kind of is your balance point. And then above is primary resistance, below is primary support. These 3 lines kind of set the tone for the day. Now that the market's below primary support, there's a lot of reason to expect prices to stay bearish today. All right. So, oh, and this, by the way, is another one of those system add-ons, meaning it's a standalone. You can use it on any chart you want. All right, they're beating up on the lows here. And we're actually getting another signal here on the hawk. It looks like a macro pullback / 4-arrow consolidation type signal. 1, 2, 3. It's going to be signal number 4. Problem is setting up the trade, right? We don't have a whole lot of structure here. I suppose we could risk it to here. The crest and the macro line would be a little better. Better still, this high. Can I do that? Oh, no. That's out of reach. It won't allow me to trade that. All right, well, it is a demo room, right? So let's demo. So I've got the warning dots. I'm anticipating the hash mark printing here. I know a lot of you are looking at this and saying, what? He's risking 300 to make 50? Is that stupid? He must be doing something wrong. Well, no, not really. You see, we're not focusing on risk-reward ratios. And I know that sounds taboo. And now we're moving into yellow bars here, so I'm going to cancel the order. Oops. Risk-reward ratios only work in hindsight. They don't work very well when you're actually setting up a trade. You should base a trade based on probabilities. For instance, here's this morning's trade. Even the most die-hard risk-reward trader is going to look at this. Oh, by the way, we have different modes here. You can go to manual mode if you want to preset your quantity, your trade quantity, right here. And you can also manually select your targets. So that's what I'm doing here. So here we have a signal now. Now, be honest. If you're a risk-reward trader, you're looking at this and you're saying, "Oh man, my stop loss is here. I need at least twice back in my reward, but I've got all this support right here. No, I can't even get a 1-to-1 out of that. I'm going to pass on this trade." Right? That's what risk-reward traders do. And then what happens? Boom. Right? The market falls. Risk-reward ratios like that tend to keep you out of perfectly good trades. Better to look at, and I can show you examples like this all day long, but if you've been trading for any time at all, you've done it to yourself. Better to control your risk so that you know if the trade does not work out, you have not lost more than you can afford. All right, so you can take a little bit of comfort in that. That if the trade does not work out, you have not lost more than you can afford. In my case, I've capped it at 2%. You can change it. You can make it higher or lower, whatever the case may be. Generally speaking, anything less than 5% is prudent or considered prudent. So by capping your risk, now we can focus on the probabilities. Well, why the probabilities? Well, because the risk part of the equation is the only part of the trade that you have any control over, right? You don't have control over the reward side of the trade. If you did, well, I don't think you'd be here this morning, right? The risk side of the equation is the only part you have control over. So if you set your stop like this, note the risk amount, $360. Or if you place your stop like this, note the risk amount, still in that neighborhood, around $360. Or if you place your stop like this, see, the risk amount, it never changes. What changes is the quantity and the probabilities. What do I mean by that? Well, first off, we know this is a high probability signal. It's a first micro-macro cross signal. It's a very high probability signal for us. Here's another example. First micro-macro cross. High probability signal. Same thing. All right. Well, not a trick question, but which trade has the greatest probability of success? This trade, with my stops there. We'll call that trade A. This trade, with my stops here, we'll call that trade B. Or this trade with my stops here, we'll call that trade C. So here's my profit objective. This is my high probability profit target. So which one has the greatest chance of success? Trade A, trade B, or trade C? Now if I can get somebody who's new in the room instead of the DTS members, because I beat this into their heads all day. Anybody gonna play? Come on, I can see there's enough people in the room here. Somebody take a chance. Trade A, trade B, or trade C. Which one has the highest probability of working out? Oh, got at least a couple people to play. Well, it's trade C, of course. Your stops are further away. That gives you more staying power, right? That means you have a higher probability of success. So that's why we set up our trades with perhaps a little bit more of a liberal stop, or what looks to be a liberal stop, but our risk is always capped. One, two, three. Oh, that was a 4-arrow consolidation anyways. I forgot. I do take a 4-arrow consolidation off of a yellow bar. And that one did hit its profit objective as well. Shoot, forgot about that. All right, well, there you go. I'll put my stopbox away now. We'll see if we get another signal. Crude oil also tumbled off here this morning. So here's crude oil on the Eagle. Get a little bit of an overview. You can see crude oil very, very sideways here according to the Eagle Trend Trader. Kind of stuck in this trading range. So now we're at the bottom end of the range where we would anticipate some buyers to start buying the market up. And we would expect sellers to sell it down from here. But at the moment, nothing happening here on the Eagle, no trend signal. Crude inventory, of course, in about half hour's time. So we would anticipate the market to be a little bit sideways until then. Pardon me. All right, well, we may see the market. Oh, actually, here on the Falcon, we're producing a trend change signal, possible trend change signal. Here on the Raptor, we'll focus on the Raptor here for a moment. We might be getting a soft edge buy signal. We've had our retest of the low. We'll see if they come out with a buy signal here. It is a little risky though because the market momentum definitely down. But if we see them pop here above 47.90, we should get a little bit of a rally out of the market. The tool you see here on the Raptor, this is called the Trailblazer. It's like the Trade Manager in that we've got all the stop strategies. They're all customizable. We don't have. You probably noticed we don't have the risk component. You preset your quantities up here, so you need to know more or less what your position size should be. And you can also preset your targets, as many as 3 targets. And you can set your quantity whatever. You can trade 100 contracts here if you want. The reason the Trailblazer came about is some of our owners were trading some very fast markets, and they needed a way. They said, "Can you give me a one-click entry system?" And so that's what the Trailblazer does. You can just click the buy or sell market buttons, and you'll see that we'll have op enabled. We'll have our preset profit targets based on these figures here. We'll have our quantities. Yeah, Tony says been several days since we've been below 47.82. That's the truth. It does seem like the market is a little top heavy though. They're trying. All right, well, the Raptor not coming around just yet. Here on the Falcon, we've got a trend change signal right here. We can set this one up. Oh, there's a subsequent trend change signal. I may actually just postpone my entry until there. And let's see if we're getting a Raptor signal. Ah, there's the Raptor signal. So let me show you how, oops, wrong button. Where did you go? There we go. So now I'm just going to hit the buy market button. And notice that I got my my entry, my stop loss, my break even, my profit target. They're all automated just with one click. So that's based on this signal right here. This is what we call a soft edge buy. Are they going to push back or not? We'll watch the action on the Geiger counter. If they get below this low, they're probably going to run my stop. And this is where the buyers really need to step up. Now we're seeing a little bit of buying coming in here. The Geiger counter certainly getting a little bit more active, but normally what I tend to do as well is if the market's paying off in one direction, I tend to look for signals in that direction. But we'll see here. We'll see whether or not the buyers can pull it together. See, this is why you don't want to run your stops overly tight either. That's why you need to contain your risk. Oh, okay, that order hasn't been filled yet. Note here on the Hawk, a lot of yellow bars. So the Hawk already tipping us off that the market's entering a sideways phase. We see a lot of yellow bars printing more or less the same latitude when the market starts to enter a choppy phase. I know there's sellers here, but I don't think they're going to sell until we get closer to the hard edge, back up here around 47.94, 95. But that is a double pullback signal, so I need a little bit of luck here to ride this one out. Come on, you sons of buyers, where'd you go? Okay. That's where they went. All right, well, let's put the Raptor back on the shelf. I can cancel this trade. We never got filled on that one. Before they tagged me here, I was going to try to give them just a little bit more room. I was going to change my stop strategy, roll my stop back just a little bit, because I still think we're going to see the buyers come back here. All right, well, we'll revisit this. I try not to get a bias stuck in my head, thinking, oh, the market has to go higher or has to go lower. If you do that to yourself, you tend to get block yourself from some good signals. Okay, 47.80 looks like it's going to be our next support zone. Down here, 47.79 3/4, close enough, 47.80. Crude oil still flip-flopping a little bit. Yeah, I agree, Tony. Tony says, considering the historic levels, you'd think there'd be a lot of old buyers hanging out here around 80. I'm surprised, actually, that there hasn't been a little bit more of a buying effort this morning. So they just broke the morning lows, and we're just hovering here above the support line. And they're really taking their time. Come on. Not much going on in the soybean market either. All right, we are getting another first micro-macro cross signal here on the Hawk scalper. That's this one right down here. I would probably reserve my entry until the market took out the low. And probably cover above this little itty-bitty swing high. So not a lot in the way of signals here this morning. But that's summer for you. Signals tend to come early, and then the market just kind of flattens out. Soybeans not really going anywhere this morning either. Here's soybeans on the Falcon. We got a trend change signal right here. We're getting a little bit of heat on it. Ideally, this signal you would want to cover above the highs. We're just taking a bounce off the primary resistance, and we're stuck between the median line and the primary resistance. So we need to see the market break down below there if soybeans are going to tail off today. All right, so again, just so I can demonstrate the stop strategies to you, I'll delete my profit objective and my break-even trigger. And let me see, what should we try this time? Let's go with the chandelier stop. It's a little bit, oh, maybe I'll leave it on the swing. All right, we'll go with that. So the beauty of having your stops automated as well is it opens up other opportunities for you. I don't have to babysit this trade any longer. Well, there's not much else going on, but you get my point. I can look at, you know, if I've got a setup in crude oil. Here's a possible crude oil trade. We're getting a macro pullback signal. See, I don't have to worry about what's going on in my NASDAQ trade. I can try to set this up. Can I cover it up there? Oh, I can too. Wow, all right. So there's a possible crude oil trade. Now, if you're looking for a trade to mirror, this may not be the best one. You see how crude oil is really, really stuck sideways here? We're at the bottom end of the trading range. This is traditionally where you buy, not sell. A lot of times when the market's in a trading range, we'll let it break out of the trading range, and then we'll commit to the trade. Once the market shows us who's in control, the buyers or the sellers. Okay, and this is starting to look a little bit stronger to me, so I'm going to I'm going to jam my stops in. And I'm not going to give them too much room here. But, like I said, it is a demo room, so we do try to demo. Let's see if I'm going to get that buy signal on the Raptor, the one that I've been holding out for. Alright, so oh, and in the trading room, I do try to point out higher probability signals for you. Come on, Raptor. So looking for that soft edge buy signal. Nope, not going to do it. Not yet anyway. Well, perhaps what I should do is I'll show you how I would manage this trade. I think the market may try to get some traction here and try to trade higher. So if you are short here, you may want to run a tighter stop. But if you have a looser stop, like I do here, what I'm looking for right now is I'm looking for the sellers to step up and show me that they're interested in pushing the market lower again. Once they've done that, then I can bring my stops in. I can bring my stops in and I can start to roll down. But even worst case scenario, if the market just beelines here and tags me out, remember I've capped my risk, right? I haven't lost more than I can afford. I can share countless stories with you of people who have come to me for coaching over the years, and that's the number two mistake they make. Number one mistake they make is they overtrade. You probably, I'm not a very good example of it here this morning because I've been trying to show you a few trades, but really you only need one good trade a day to make a living trading. Did you know that? Two trades would be ideal. What that does is it allows you to cherry pick your trades. It allows you to hold out for the best opportunities. Is that all you're going to give me? Is it just that little itty bitty tail right there? Aren't you at least going to give me one bar lower? If you control your risk and you reduce the number of times you trade and you cherry pick your trades so you only take the highest probability signals, I guarantee you will make money trading. All right, well, I'm just watching and waiting. Here in anticipation of the crude inventory report, maybe we'll do it on the Eagle today. So we've got a market that's in an obvious sideways range, right? And so what we can do here is we can bracket this range using our OCO function. One cancels other. So we can buy an order above, we can sell an order below. Now notice, because these are OCO orders, if I cancel the one that's linked with it also cancels. And I can set as many of these orders as I like. If I toggle my OCO off and on, the next group are labeled OCO2, so I always know which orders go with which. You can also drag these orders wherever you want. These are live the moment you put them on your chart, so you want to be careful not to get them too tight. And then again, when you cancel the one, the other order that was related to it also cancels. That range looks a little bit big to me, though. Let's see what it looks like on the Falcon. Well, same kind of range, just above here, above the primary resistance. And here we are, primary support, so that can be our range. So we'll buy a breakout of the primary resistance, we'll sell a breakout of the primary support. And I guess I'd better get a stop going here. Maybe the chandelier. Yeah, that'll work. The chandelier is a little bit more of a conservative strategy. I don't want to get stopped out prematurely, but we'll leave this alone for another 10 minutes before the inventory report. I'll just kind of keep an eye on it so we don't get filled by accident. All right, well, all I'm looking for here now is a little bit of a commitment or recommitment on the part of the sellers, and then I can start to roll my stop in. And maybe I'll use the bar high-low strategy. If, in fact, the market does move lower. Which it's not going to. All right, let's get back to, so like I said, if you are live this trade, you may want to consider bringing your stop in a little bit. I think this is going to be the turning point for this market. A break above this high is probably going to send the market higher, so you may as well take the early stop out. This, I can tell from the width of this bar that there's quite a bit of trading going on here. Oh, by the way, this is the dynamic equivolume bars from Indicator Warehouse. The dynamic equivolume bars, if you've never heard of equivolume charting, what it does is it shows you the volume associated with each bar by painting the bar fatter or thinner. So fatter bars have more volume, thinner bars have less. What makes the dynamic equivolume bars from Indicator Warehouse unique is that they will paint on any bar style. Usually equivolume charting only works on candlestick charts, but with the dynamic equivolume bars you can paint range bars like the mean wrinkle bars here from Indicator Warehouse. You can paint tick bars, almost anything really, any kind of chart style you're following. So crude oil prices, I had to cancel the order because they were just broke here through the primary support. Also gave us a trend change signal right here. But we've still got a few minutes until inventory report. We'll see if they get back inside this trading range, and then that'll give us a level that we can bracket. All right, we'll revisit this in a few minutes. Oh my gosh, I can't believe I finally got the bar to finish. All right, I'm going to go now with the bar high-low strategy, and that's all I'm going to give them. And I'm still waiting for that soft edge buy signal here on the Raptor to come back. Got lots going on all at the same time. So once again, I suspect if they break here, 47.85, we're going to see a little bit of a rally. Come on, give me that soft edge buy signal, you stinkers. There it is. All right, so this was why I was going to try to pull my stops away before they tagged me here on that first reversal. But regardless, let's see if we can't get a stop and play here. No, that's a little cozy. And what we'll do is we'll roll that down there. Okay, so we've got the soft edge buy now, looking for the market to try to retrace back to that cloud, the top edge of that cloud. Crude prices not being very cooperative here at the moment. All right, so here's crude oil once again. This is on the Falcon. Are they going to give me a range that I can bracket? Well, I don't normally like to make the ranges this tight, but maybe what we'll do is we'll bracket the median line and the primary support. All right, so here's the median line. We're going to buy above here. And here's the primary support. So obviously I'm going to take the low into consideration. And hopefully before the report comes out, we'll see the market trading somewhere around 46.05, 46.10. That would leave it a little bit more balanced with about 60, 70 points above and below. Or 70 points. Sorry, 30 points above and below. Yes, I think that's probably wise, Tony. Tony reminding me of the alternate strategy that we use for trading inventory reports, and that's namely to let the report hit the floor, and once the report has been released, in about 30 seconds to a minute after the report comes out, you're going to see the market make a little bit of a range that you can bracket. Yeah, so if you're looking for a trade to mirror, that may be the better one to follow. But it does look as though this is kind of a typical summer trading session where that move came early and now we're just kind of flip-flopping a little. All right, a couple minutes and the inventory report should come out. Well, they're not quite as high as I was hoping they would be, but we'll let it go. Okay, inventory should be releasing in a minute here. Stops are enabled, good. Suppose I could have also rolled my stop down there. Actually, maybe that's what I'll do. There we go. That leaves it a little bit more centered. The market's currently skewered here by the primary support. So I'll buy above the median line, I'll sell below the secondary support. Ooh. Okay, well that was a touch violent. So it looks like we got filled, hit our break-even trigger, and then got tagged on the break-even. But here we can see we've got that range that I was telling you about. So there's the top end of the range. And that looks like it's the bottom end of the range. So the market up here now to the primary resistance area. So a little bit of a reaction there now. Also got a trend change signal here on the Falcon. Nice little buy signal, so we'll see or not. They follow through on that. It was a little bit more like the old crude oil inventories, wasn't it? Whereas actually you get that violent move out of the gate. I keep forgetting to disable my break-even trigger, but it may not have been such a bad thing today. And in fact, I think I'll go back to a more conservative stop, like the chandelier. Come on. Looks like they're holding that trend line, or trying to. Oh yes, we have a nicely defined range here now. So we've got some buying going on around the bottom end, selling occurring near the top end. Pardon me. Well, I may have to pull out the magic mouse here in a moment and actually manipulate the market. I don't like to do it too often because it's not fair to other traders. But I think we're going to see the I think we're going to see the crude oil prices pick up a little bit here. $45, $46 is pretty low nowadays for crude. Well, yeah, nowadays. Considering a year ago, or I guess it's a little more than a year ago now, it was trading almost 3 times that much. Yeah, I agree, Tony. Tony says I don't think the report didn't. I don't think the report surprised any of the big boys. I was suspicious when we saw all that selling go into the report. Here's a clue for you as well. If you're watching inventory reports, normally the market is like this. It's dead neutral before the report is released. That's when the market is unsure. If the market tends to have a better idea of which way it's going to go, you will usually see active selling going into a bullish report and active buying going into a bearish report. Yes, I know that's the opposite of what you think it would be. But these are crude oil traders we're talking about. And they don't always play nice. So they'll try to get people to load up on the short side so that they can tag them out on the next rally. So this matching high here around the 46.50, 6.57 area looking to be the next obstacle to overcome. After which we'll have the market opening highs and the overnight high. So there's a few stumbling blocks along the way here as crude oil prices try to rally. All right, well, we'll put that on the shelf. That's taking its time. Speaking of taking its time, oh man, our Raptor trade just shriveled up to nothing. I'm thinking we should at least be able to find our break-even trigger, and I may bring my break-even down a little. Here we go. We'll bring it in just before these matching highs. And I think I may run a tighter stop too. I'm not liking the way the market is hesitating so much for obvious reasons. When the market takes this long to produce any kind of follow through, it normally means sideways trading. I can always roll my stops back, so we'll just leave it at that. Reduce my exposure a little bit and kind of pinch the trade. If they take out the high of this bar, if this bar forms above the high, we should get a little bit of follow through. Like I say, at least to the, oh, there we go. Okay. We should at least be able to hit our break-even trigger now. Yeah, here they come. They're going to end up going sideways here. They're going to bounce us around a little bit. Well, summer trading. You got to get in there early, take that first signal, and then book yourself a tea time because there's not much else going on, I'm afraid. All right, well, we may end up closing up the room a little bit early here today. If anybody has any questions or if you want to see any other markets, please let me know. Otherwise, I'm going to hold my stop here for a little bit still. Otherwise, I think we're going to wrap things up. Call it a day. Good question, Tony. Tony asks, Eric, do you ever see anything wrong with watching the NASDAQ pre-market and getting in on a trend before the open? No, absolutely not. In fact, there's very often pre-market reports that are released about an hour before the open, and that's true for a lot of the stock-related indices, not just the NASDAQ, but the E-mini, the SPDR, if you're trading the ETFs, the Dow. No, a lot of times you'll get about an hour before the open. You'll get some very interesting activity. Not so much this morning, but take my word for it, it does happen. So yes, if you get a strong signal pre-market, like we did here on the Eagle this morning, that can kind of set the tone. You may come into the day a little bit more bearish, knowing that we had this green bar sell signal. No, nothing wrong with that. All right, you guys, I'm going to try to nurse this trade to break even. It's going to be a little excruciating, but we'll see what we can do. And thank you for your time. I'm sorry the markets weren't a little bit more active. You see here the hawk getting into all yellow bars again, telling us, this market's kind of stuck in a sideways mode. So it's a bit of a grinding kind of day. We're going to do it again next week. DTS owners, I will see you in the trading room tomorrow morning, and hopefully we'll see some good opportunities tomorrow. All right, we'll talk to you later. Bye for now.